Yes, done. Hi. Very good evening to my dear CA final students who are going to write the exam in September 2025 for indirect tax laws, that is tomorrow. So now there is one particular reason why this video is being done right at this moment of time when the exam is tomorrow. For a simple reason and fact that we need to clearly understand what is our planning, preparation and strategy which we need to keep in mind for examination tomorrow. As we are aware that 80% weightage is given to GST and then 20% weightage is given to customs, it is very, very important that you get a complete clarity of thought on the conceptual learning what you have done. So now it's high time that you just go through some typical kind of questions, especially in topics like place of supply, input tax credit, then topics like appeals and revisions, assessment proceedings, all these kind of areas is what you need to look at very clearly because they are of more importance when it comes to examination. So now, let me tell you one point very clearly that from GST perspective, primarily majority of the questions will come from topic like exemptions, time of supply, value of supply, place of supply, input tax credit, your registration, credit note, debit note, and your payment of tax, then import and export under GST with refunds, then demands and recovery appeals and revisions. These are the areas where majority of the marks will come in the examination. So that is important that you have a complete focus on these topics very, very clearly. And other topics are of course of medium priority. Yeah. And the medium priority, when I say that is your amalgamation, agent, ISDs, e-commerce operator, accounts and records, they are all mediocre topics. But when it comes to customs, of course, we know very clearly that the important topics are predominantly number one, valuation, types of customs duty, and then your duty, then your warehousing procedures. They are all very, very important. And one more important thing called baggage rules. There's a good amount of importance given even for baggage rules as well. So these areas is something what you definitely need to focus upon when you are preparing for the examination. So if you have not spent some good time on this topic, kindly ensure that you spend some good time on this topic because they are of good importance. And my dear friends, let me share the screen and tell you some important points. I'll not take much of your time, but I'll discuss a few things. Done. I'm pretty sure the screen is visible for all of you. Now, one thing is very clear, my dear friends, whenever an exam pattern is coming, we all know that 30 marks weightage is given for MCQs and 70 marks weightage is given for descriptive kind of content. My humble suggestion to you all is very clear that when we talk about an MCQ, don't take MCQ for granted. Please look at the options given for the MCQ. Sometimes the options will be slightly tricky, where you observe that B and C both are suitable options. So you need to recollect the provision what we discussed during our lectures as to what exact provision will come into picture in that place. Only that you apply. So please be very cautious. Just like that, don't go ahead and do it. Clear? Because MCQ is one way very, very scoring, and at the same time, one way MCQ is slightly dangerous because there's a high possibility that we might lose marks. Clear? And in this 20 marks, it is very important that you at least target some 20 to 25 marks from the MCQ part itself. And when I talk about descriptive part, of course, we have an optional question. Please take a decision which one you take it as optional. Something which you are confident about, something which I will put it the other way around. Something which you are not confident, at least 50%, you leave it as option, but rest of the questions, please ensure that you tackle. And let's talk some honest things that some students take FTP and all for granted. Don't do that. It's very clear that FTP, you have to look at the schemes which are going to come in the examination. Majority of the schemes only will come in the examination. So have a clarity of thought on that schemes, then your job is done. Correct, right? So please ensure that you're not going to miss out on any of this topic. Clear? Now, topic wise, let me tell you what are the areas you need to focus upon for the examination perspective. Number one, with respect to supply topic is some important discussion wherein some question may come in the examination from component supply or mixed supply. Or they might ask a question from section 7.1c ready with schedule 1, transactions regarded as supply even though there is no consideration. Or something related to 7.2a ready with schedule 3, which are neither regarded as supply of goods nor regarded as supply of services. And then coming to the discussion about charge of GST, RCM provisions are important. RCM provisions, sure shot 100% question will come in the examination. May not be necessary that direct question may come. Sometimes RCM provisions are added in computation of tax level and then they ask in the examination. Then exemption from GST, sure shot 100% question will come in the examination. So please ensure that you are clear with the exemption point. And my humble suggestion is that at this moment of time, don't try to mug up the exemptions. One thing is very clear that you should have a hand holding on the exemption. In exam, when a point is coming, you should be able to identify and tell whether it is exempt or not. That level of knowledge is sufficient. They're not going to ask you in the exam like write 20 points, 10 marks. That kind of question will not come in the examination. So don't worry about it. Then something related to place of supply, majority of the times question will come. Please be cautious with service in relation to e-commerce operator, goods supplied on board a conveyance, service supplied on board a conveyance, transportation of passenger, then performance-based services, transportation of goods. These areas you have to be very, very clear. Especially one more point of section 13A. 13A, we have got three interesting elements: services by bank or NBFC to account holders, then intermediary services, hiring of means of transport, including yachts, but excluding aircraft up to a period of 1 month. 13.8 provision, possibility is there that question will come in the examination. Then time of supply, 1 2 interesting amendments are also there. I'll spend some little bit time to discuss that with you as well. Value of supply, there is no change in what you learned before. It's absolutely the same. It's absolutely the same for those students who already learned before, because compared to May and September, there is no amendments in value of supply as such. But be careful with the valuation rules, especially Rule 28, which talks about rule supplies between distinct or related person. A probability is there that institute may tackle one point in Rule 28. Then ITC, of course, the most important topic. There is no second thought about it. And 101% one question will come in the examination. So don't take it for granted. Then tax invoice, credit note, debit note. A small point might come in the exam, friends. So please be cautious with that area as well. Then refunds. Please have a clarity of thought on how do we calculate refund in case of zero-rated structure, zero-rated supplies, and also in case of inverted duty structure. A question might trigger from working methodology, or a question might come on procedural aspect. So please be careful with that. Then is your assessment and audit, where a question can come from special audit, or they might ask about provisional assessment or scrutiny of returns. Then, of course, very, very important topic, appeals and revisions. Almost every time question is coming. And one point is their latest amendment, pre-deposit. I'll discuss that with you. Possibility is there that question may come in the examination. Next point is about, my dear friends, your areas like inspection, search and seizure. A small question may come, not mandatorily obvious. Clear with this? I'm pretty sure that you are getting clarity of thought on what areas to be focused upon. And of course, something very important called demands and recovery. In that, one new provision has come, section 74A, where a probability of question may come. It is a combination of 73, 74. It's absolutely the same with a small change in the time limit. Then there is a concept of offense and penalties. Very, very important provisions. Please be careful with what is the penalty when owner comes forward. The penalty percentage is different, 200% of tax. And when owner does not come forward, the penalty provisions are different. So please be cautious with that. These areas which you need to focus upon very clearly. And customs, of course, valuation almost sure short one question will come. Have a clarity on classification and about warehousing, manufacturing in warehouse, where if there is related to goods for use in EOU, EHTP, STP, there is no time limit as such. Any other case, we have got time limit of 1 year. Even though we have got time limit of 1 year, after 90 days, interest will start at the rate of 15% per annum. We know that, right? In GST, everywhere it is 18% per annum, but in customs, it is 15% per annum. And be cautious with the foreign trade policy as well. Baggage, I don't think I need to discuss that much with you because you already know that baggage rules, more or less, sometimes question come in the examination. So going back, my dear friends, with respect to some interesting amendments, which I want to tell you, most of you would have already heard this in the discussion, what we have done. Please see that. Number 1, alcohol liquor for human consumption. We know that GST is a tax on supply of all goods or services or both, except alcohol liquor for human consumption. In the similar lines, GST will also not apply in case of undenatured extra neutral alcohol. This is basically your pure form of alcohol. Undenatured extra neutral alcohol. On that also GST will not apply because it is very similar to alcohol liquor for human consumption. So like how GST does not apply to alcohol liquor for human consumption, GST also does not apply to undenatured extra neutral alcohol and rectified spirit. Come on, what is that spirit, my dear friends? Rectified spirit, which are used in manufacture of alcohol liquor for human consumption. So GST does not apply to alcohol liquor for human consumption, undenatured extra neutral alcohol, and also for what, my dear friends? Rectified spirit, which are used in manufacture of alcohol liquor for human consumption. On these products, GST will not apply. Next interesting element is apportionment of co-insurance premium. What does this mean? So let us say there is a person A. There is one company called Tata Limited and there is one company called HDFC. These two of them together has given a co-insurance, my dear friends, and for which A will pay premium. Now, what law is told is that this activity of apportionment. So, for example, friends, if let us say premium is 10 lakhs, on that 6 lakhs is taken by Tata and 4 lakhs is taken by HDFC. Law 6 lakhs is taken by Tata and 4 lakhs is taken by HDFC. Law clarified that this apportionment of co-insurance premium is neither regarded as supply of goods nor regarded as supply of services, provided lead insurer, provided which insurer, my dear friends? Lead insurer pays GST on entire premium. So, for example, let us say the lead insurer is Tata, then Tata is required to pay GST on 10 lakhs. If Tata pays GST on entire 10 lakhs, then HDFC need not pay any GST again because activity of apportionment of co-insurance premium is neither regarded as supply of goods nor regarded as supply of services. If lead insurer pays GST on total amount of premium. Very, very interesting point, friends. Come on, get back. Next point. Services by insurer to reinsurer for which commission is charged. Let me discuss that with you in a small detail. So let's say, for example, Tata has provided insurance to Mr. A for, let us say, 100 crores. And A is paying, let us say, premium of 1 crore. Now, Tata has got a doubt why to take that much risk. What they have done is they have done reinsurance to one company called X Limited and they paid premium of 30 lakhs. Now, the logic is very simple, my dear friends. How much premium they paid? 30 lakhs. From 30 lakhs premium, Tata will reduce, let us say, commission of 5 lakhs. Why they will reduce commission? Because this insurer is giving business to reinsurance company, which is X Limited. So Tata will collect commission from X Limited and effectively pay only 25 lakhs to Tata, 25 lakhs to X Limited. Now, law is telling that if X Limited pays GST on 30 lakhs, if X Limited pays GST on 30 lakhs, there is no requirement to pay GST again by Tata on the 5 lakh rupees. There is no requirement to pay GST by Tata on that 5 lakh rupees, friends. So, service by insurer to reinsurer, where ceding commission is charged, is deducted from reinsurance premium paid to reinsurer, provided reinsurer pays GST on the total premium which is collected by reinsurer. Next line. Renting of immovable property, small point, keep in mind, RCM provisions will come only when supplier is unregistered person, recipient is registered person other than composition registered person. If recipient is registered in composition scheme, then these provisions of RCM for renting of immovable property will not apply. So for renting of immovable property, RCM provisions will apply if supplier is unregistered person and recipient is registered person other than composition scheme. Next. Sponsorship service, my dear friends, RCM provisions will apply only when supplier is other than body corporate and recipient is body corporate or firm. This is also an interesting amendment. I repeat one more time. For sponsorship service, RCM provisions will come only when supplier is other than body corporate and recipient is a body corporate or firm. Only then the RCM provisions will trigger, my dear friends. Next slide. In case of payment of tax by e-commerce operator under which section, friends? 9.5. Already we know about something called 9(5) where for certain notified services which are supplied through e-commerce operator is liable to pay GST. And if e-commerce operator does not have physical presence, their representative in India is liable to pay GST. No representative, they must appoint representative and make him liable. And if e-commerce operator is liable to pay GST under section 9(5), my dear friends, then eco should pay GST using cash only, but they cannot use credit. So that means for payment of tax under section 9(5), they cannot utilize input tax credit. That is the beautiful point we have to observe, my dear friends. Next, service of insurance provided by motor vehicle accident fund, that is also exempt. How does money come to motor vehicle accident fund? Basically, whenever we take insurance for bike or car, we take something called third-party insurance. Now, these insurance companies, out of third-party insurance money, what they get, they will give that money to motor vehicle accident fund. And this motor vehicle accident fund will give that money to those people who are suffering on account of hit and run case, something like that. So insurance which is provided by motor vehicle accident fund is exempt. Then 13(3), my dear friends, RCM provisions for time of supply. Generally, what is the RCM provision? It is earlier of date of payment or 61st day from date of invoice. If invoice is issued by supplier. But what is the interesting point is that they have brought an interesting provision telling that if supplier is unregistered person, then recipient, who, my dear friends, recipient must issue invoice. Recipient must issue invoice within 30 days from date of receipt of goods. So in RCM provision, what they told in section 13(3) is that earlier of number 1, date of payment. What is date of payment? Date when payment is entered in the books of accounts or date when payment is debited in the bank account, whichever is earlier. Number 2, 61st day from date of invoice. If invoice is required to be issued by supplier. Third one, date of invoice. If invoice is required to be issued by recipient. And tell me, friends, when is invoice required to be issued by recipient? If supplier is unregistered person, recipient is registered person, and moreover the transaction is covered in notified RCM under section 9(3), my dear friends. In that case, recipient must issue invoice within 30 days from receipt of service. And then time of supply provisions will change accordingly. I strongly believe that we got good clarity on this 13(3), my dear friends. Good. Get back. Next. ITC in case of X works contract. So logic is simple, friends. Imagine Shiva Teja purchased goods from Mumbai. Shiva Teja purchased goods from Mumbai. Now, imagine the contract between supplier and Shiva Teja is that I will go to Mumbai and collect the goods X factory only. X works contract we call it. That means at the factory gate of the supplier only, that reward, risk and ownership is being passed on to me. Then law is telling you can claim ITC because risk and reward and ownership is passed on at the factory gate itself. Even though physically it might take some more time for it to reach your own place of business. Getting it, my dear friends? Done. Pre-deposit, let me complete that first. That is same for first and second appeal. For first and second appeal, my dear friends, pre-deposit for first appeal is covered by 107. Second appeal is covered by 112. 107 is appellate authority. 112 is appellate tribunal. And pre-deposit is, my dear friends, 100% of admitted dues plus 10% of tax in dispute. And this is maximum 20 crores under CGST or maximum 40 crores under IGST. That is the point that is to be noted. So what is the pre-deposit that is to be paid, my dear friends? 100% of admitted dues. Correct, no friends? Plus what? Come on, friends. Plus what? 10% of remaining tax in dispute. I strongly believe that we are getting good clarity on what, my dear friends. This is a story of pre-deposit that is required to be paid in case of section 107 and 112. And what is the pre-deposit that is to be paid, my dear friends? 100% of admitted dues plus 10% of remaining tax and disputes. And the answer is same, whether it is appeal before appellate tribunal or appeal before appellate authority. Are we getting clarity, my dear friends? Come on, friends, please reply. And this amendment is made by Finance Act 2024, my dear friends, for your kind information. Clear? So whether it is appellate authority or appellate tribunal, the pre-deposit remains same, which is nothing but 100% of admitted dues plus 10% of tax and dispute, subject to maximum of 20 crores under CGST and 20 crores under SGST. Of course, if it's IGST, it is 40 crores. Are we clear with this point, everyone? Done. Very good. Thank you. Next. Finally, I want to talk about something called Section 74A with you, my dear friends. Which section is that? 74A. Friends, let me tell you, Section 74A is a combination of Section 73 plus 74. What is 73? Determination of tax not paid, short paid, ITC wrongly availed or utilized in case of other than fraud, misstatement or suppression. 74 is in case of fraud, misstatement or suppression. And this 74A covers both the cases, whether it is on account of FMS or not on account of FMS. And there is a common time limit is 42 months from due date of filing annual return for issue of notice, and for order it is 12 months. Order it is 12 months from notice, plus additional extension maximum 6 months. Technically, overall, if you see, it is again 5 years only, my dear friends. But this 74A section is applicable from financial year 24-25 onwards. That means for the years prior to financial year 24-25, section 73 or 74 only will apply. 74A will apply only from financial year 24-25 onwards. That means for the issues which are pertaining to financial year 24-25 onwards. Getting the point? And penalties are same, my dear friends. That means other than FMS, 10% of tax or 10%, whichever is higher. If it is FMS, 15, 25, 50, 100, same logic is there. But 30 days, what we had in 73, 74 is extended to 60 days, my dear friends. That means if it is before notice, 15%. After notice within 60 days, 25%. After order within 60 days, 50%. After order after 60 days, it is 100%. That is the penalty that will come into picture. And this concept is given by which section, my dear friends? Come on. Section 74A. An interesting provision which makes some good sense. I strongly believe that we are getting good clarity on this point, my dear friends. Why I wanted to discuss at this moment of time these areas, because there is a high possibility that a question may trigger the examination. I don't want any chance on these points. I'm sure I know that you already learned these points, but even though you learned, I wanted to highlight this point once again in front of you. Are we clear with this? Don't get confused with 74A. 74A is just a combination of 73 and 74. It's absolutely the same. Are we clear? Clear? And the 60 days logic is simple. That wherever 30 days was there in 73, 74, it is now changed to 60 days. And the penalty amounts are same. And notice to be issued with how much time, my dear friends? 42 months from due date of filing annual return. And order should be passed with how much time, my dear friends? Order should be passed within 12 months. Clear? Order should be passed within 12 months from issuance of notice. And it can be extended for a further period not exceeding 6 months. And general extension will be given by commissioner or an officer who is authorized by commissioner. Clear? And authorization will be given to officer not below the rank of Joint Commissioner, guys. So these are the important areas which you definitely keep in mind for the examination, my dear friends. So I'll not take much of your time, and I wish you all the very, very best. Wish you all success. Do come out with flying colors. And always keep in mind during the examination time that your patience is the key and perseverance is the complete key to success. So be cautious, be careful, read the question once and twice before you start writing it. Be careful. Clear? Thank you so much. Take care. All the very best. Wish you all success. Take care. Shiva Teja signing off. Bye-bye. All the best, friends. Bye-bye. Thank you. Bye. Thank you, sir. Thank you very much. Thank you.